the 50-day right around 95. Structurally behind the scenes, Wall Street is very loath to add more NVIDIA exposure. As someone who gets NVIDIA exposure through swap, I can tell you, we're buying, begging, borrowing, offering up my kids to get long NVIDIA exposure. Whether that translates into NVIDIA dipping or not, who knows? But certainly, most of the firms I talk to are packed to the gills in NVIDIA. One firm I talked to from a corporate standpoint cannot buy NVIDIA on any one of their desks. They're completely and totally tapped out. So, as a contrarian, to me, I think that means it's due for a dip. But I mean, it's been defying gravity here for a while.
That's true. I mean, you look at the weekly chart and there's like not much else out there that looks as parabolic as this. Whoops, let me get the chart up for all of our guests on YouTube here. So we're looking at just an absolute ballistic ripping tear of a trend on this thing. And reversion targets are pretty common. So like reversion trades for technical analysts are easy pickings typically. Um, I don't think we're going to see the $50 mark. That's just ludicrous. But we're looking like $90 is about the worst it could get for a pullback. We got other targets at like 101, 102, a liquidity zone right down here at like 107 to 110. And then there's kind of a halfway point in the lurch where we tip one side or the other. So I believe a pullback is imminent too. And in the short-term structure, I mean, it's holding kind of right on that halfway point between our supply zone and our next pivot, which is just basically a reversion trade. I mean, you can see the obvious consolidation here right at 115 and some change. So I mean, in the short term, yes, the split has had a little bit of a volatility effect on it. I mean, having taken place, yesterday it got a little volume to push, but it never quite made it up to that demand zone or supply zone up here. And if you think about it, it kind of hit more or less a fib target and then turned around on us to consolidate. So now we're kind of in the lurch. We're in the middle between these two areas. To me, it almost looks like we could either A, wait for the dip to kind of hit one of these levels, find some support, consolidate and reverse, or take a very short-term short on it, which is what it appears that some institutions might be doing here with some of this volume. But that's just from my spec. But you got access to talking to a lot more desks out there, and you're pretty much just tapped out buying it. Are they inclined to maybe sell some options on it? And that's possibly what's going on to maintain some liquidity. That's a possibility too, which would tend to, change the parameters on the expected move. So interesting technical analysis on
It's
this.
possible. I mean, you've got a bunch of firms that, are getting the risk guys, not knocking on their office door saying, hey, from a firm standpoint, we're way overloaded on NVIDIA and they got to do something.
Right. I mean, as far as that old saying with, Warren Buffett saying like the market can remain irrational much longer than you can remain solvent. That applies to firms too, and that's exactly it. When the boat's loaded on that stuff, they're a little bit overboard on it. They got to do something. It makes sense to me to sell options on that, but that's just kind of what my focus is on long-term investments overall. So you've
Right.
got
But from their standpoint, that may not work for the risk guys.
right, because that's where the things are going to be really governed is what's the risk on the total position versus the probability of, even though you've got options in a covered position, if the price declines rapidly, you're kind of still holding the bag, and that's where the risk guys would be a little nervous. I would be too. You don't put your eggs in one basket. That's just kind of a given. But I mean, at what point does this kind of have to start unraveling a bit? I mean, the other point is like, what's their average cost basis on in their Nvidia position is the real question. Did they chase it up with retail, or have they been long since $50? I mean, you really can't.
I mean, certainly, I think, you've got a lot more buy and holders in NVIDIA than you do in like our NVDX, where, typically on a big up day, we're going to see people take profits. On a big down day, we're going to see people buy. But, they're using that as more of a trading vehicle. I got to figure there are a whole lot of buy and holders right now in NVIDIA who aren't going to sell, who actually listen to Kramer when he says, own it, don't trade it.
Right. Good point. There's a whole lot of that, and that's why we do what we do on Thursdays. I mean, I don't know if I was an option seller, with the insane amount of implied volatility on this thing, and even in spite of the split coming down to 120 a share, I almost want to say that those 90 strikes are looking pretty juicy to sell, whether I get assigned or not. Can I justify that as a reasonable place for risk? Sure. But would I go and sell like the 107 or 110? Probably not, from my standpoint. And I know that institutions are going to be weighing this against the cost basis altogether anyway. But then the risk guys come knocking on the door, and they got to move something. So the next move here, I don't know where the tripwire is, but there's one more risk strategy, a risk aversion strategy that is possible. I wonder how many are going to run a collar on this, and where that collar would be. The collar strategy is kind of an interesting one. You sell a covered call and you buy a long put, and basically the proceeds you get from selling the call is to purchase the put as a security token, so to speak, cover your risk. I want to say that that's going to be right at that 110 level, just from looking at the chart. And in general, that's where I would put a collar if I was an institution, especially if my cost basis was pretty close to that. Like, so let's say I got long about 95. Whatever the number was pre-split would be equivalent in that area for risk. So I would say that would probably be where a collar would be, so that even if I get taken out of it, I would get taken out of it for a gain and not a loss. It's not a stop loss. It's a take profit loss. So almost like a trailing stop, but it's automated with options, plus you get premium. I wonder if any institutions are running that way or not. And then the other strategy is with NVDX. I mean, that would be almost a no-brainer as long as the liquidity was there in the options chain for me. So, yeah, it's going to be a tough call, but I think that we're due for a pullback, and I think if there is a little bit of blood in the water, tripping a certain wire, probably at about 115, about half of this upward trend here, would be probably right in this mark here, 115.50. You can see the consolidation on the 2-hour. I want to say that's going to be where the tripwire is. This is where the collar would be, and then panic selling would take place around 100, and then worst case scenario $90. But that's a tough call even from my point. It can hold this position, consolidate, and pull one of these where it gives a little pop back with a wick to that pivot, and then just rips a face off to the upside. That's also possible. And I mean, analyst targets adjusted were upwards of what, about 2 after the split, almost 200, like 180 or something like that. I want to remember, which is huge. I mean, if you want to take and block that off as a primary secondary move, start here, run this. You've already made most of that move, and another move on top of that. I'd say 160 is more probable, but it's going to be anybody's guess, and the next couple weeks is going to be pretty crucial to figuring that out. But knowing where these targets are ahead of time, knowing where these pivots are ahead of time, gives you a little bit of an edge on where your position should be. So, yeah, stay tuned. I think this is going to be an exciting ride one way or another. I don't think we're going to avoid.
Or you know what? It could go flatline for a while too.
That's true.
Consolidate these gains.
I mean, if it holds above 120 and kind of stays in that 120, 125 range for a long time, I would be, outside of that, given another week or two of that, I'd be bullish as hell. But I'm going to wait and see where things kind of lie with this 120 level for my personal taste on this.
I mean, remember through March, and half of April, I mean, it traded in a, I mean, it traded in a range after that really big move to begin the year. So I wouldn't be surprised if we see it in somewhat of a tight range for a bit.
That's true, and it makes sense to where that was kind of the mean consolidation pulled back. I mean, it did everything textbook in there, but this ballistic run here was a little bit unprecedented. Aside from measuring that move, I didn't think about that before. So that was primary and secondary. It went right to target. I'll usually take this as a
That's
primary.
why you don't predict. You
Right,
trade based on what you see, not based on what you think.
exactly. What is the old saying? React, don't predict.
Yep, that too.
So when you got a primary move here, I like to take the accumulation from high to low in a box and then take and split the mean of consolidation and set support there. And an outside move, it went right to target and then some. Yeah, this is going to get interesting. I think we're in for a little bit of volatility or not. I mean, realistically, it could go and do absolutely irrational things. And I'll quote Warren Buffett again: "The market can stay irrational much longer than you can stay liquid." So stay tuned. It's going to be interesting. Get in for a little bit of a ride, and you know, don't listen to Kramer on this. Don't go like own it, don't trade it. Trade it because it's going to be some volatility.
Yep.
Not to say you couldn't have a core position to own, but you know, that's why I have more than one account. Oh, anything else to look at? I mean, a couple others in the sector, real quick, since we got a minute. I like to look at like AMD and all the other players in this mix. AMD is kind of hitting the point where I'm a little bit concerned, but I think it might be a good buy if it holds this area, and then maybe resume running back up to one of these targets up here, like around 170, 175 or so. But let's see what this range does. This has basically been a one for one up. It's consolidated, given half of the secondary back. It's kind of holding an area of interest. It may end up, consolidating sideways for the rest of the year, as the same way we could think of NVDA doing the same thing. So tough call on
What
that one.
concerns me, yeah, I mean, I guess you could buy it if it comes back above the 50-day, but what concerns me is the past couple of months, everything AI, including the infrastructure, which I really like, has been ramping, and this has come down a lot. On the basis of trading based on what you see, I think this chart might be trying to tell you that AI may leave this guy behind. So I would be a little bit careful here.
Definitely a good concern. Because yeah, if it does break that, that 158 level here in the base of this critical zone, I mark those in red. That's where things can go south, and we've got
200
138.
days at 144, not too far.
Right, it'd be an easy trip, and that would kind of be about where price would meet a reversion of this current. You can see the 2 hour is a primary, secondary here. Reversion would be probably about 150 to 152 by the time price gets there, with the 200 moving up still. Yeah, 144 to 148 seems about to consolidate in that area. That's a good possibility. And then what was the other one we're looking at? IBM. I'm kind of licking my chops at IBM because this is either going to be an epic reversal and a reversion back to like 180, or this is going to be a bear flag and trip over to 155. So same kind of scenario.
163.31 is the 200-day. And if it can, right now, it just, yeah, it didn't, did it? Yeah, it didn't undercut and rally today at the 10-day. Theoretically, there's a gap fill there. I mean, 173 is the 50-day, so we'll see.
Good point. Yeah, it could go either way. So I'm just kind of licking my chops, waiting for the next shoe to drop on this one. And I like IBM. I didn't really like doing much more than waiting for it to pop and then short it years ago. I used to, take and going back into 2020 was another thing, but back in here. Let me see here. What year was that? Gosh, it's been a while. It might have been this one. I can't remember. At one point, I was like kind of waiting for it to pop and then short to drops, but having seen this nastiness here recently, I kind of fell out of shorting it and decided to look for longs, and that's where I started. Around the beginning of last month, I started taking some long positions and met my goal, but now it's pulled back, it's reverted, and then we got this little reversal here, so we're kind of consolidating in a range. So I think 171 is going to be the critical point to where if it breaks that resistance, sure, we can go 175, maybe even eat this whole gap to 180, but in short term, it could also go and test 160, 161 one more time. So yeah, this is just another leg in the sector, and if you realize that everything's kind of consolidating in those areas, it kind of makes sense that chips are just going to be more likely to be sideways for a while. What was the
But
last one we're looking at was, dang, I forgot the ticker. Then there's
what's the
AI.
stock? Oh, C3, yeah.
And it's kind of peaked at a 1-for-1 measured move, and it's in a fib level of the previous high. I think that's the what is this 73.6 or whatever fib level. I'm terrible with fib numbers. I like to do just basic math, none of that advanced stuff. But
I was told there would be no math.
yes, especially on a day that ends in Y. But I mean, it's kind of gone above its reversion here. So like, I look at the previous trend, I look at the previous consolidation. It basically made a nice move above that, and I can expect maybe an outstretched move to about 32 or so on an extension. But again, it's just sector-wise, everything's kind of at a standstill, waiting for the shoe to drop, and it's like almost like one's
Yeah,
waiting
I
for the
mean,
other.
this looks a bit extended to me. I mean, there were a bunch of potential buy spots. This would not be one of them. I run a number of different kind of quant strategies, and this was on our watch list to short today. We would have needed an up move. So, I mean, I don't short down moves, but
Right.
I'd still prefer to short this than to go long it here.
Agreed. That's kind of where that's at. And then one that Kramer mentioned last week, was it snow, or was that the week before?
I know he's mentioned it. I don't remember when.
I want to say he said sell it.
Oh, so ugly.
But I remember looking at the key pivot here at about 124 and going, man, I'd be waiting for a reversal here and maybe see a nice fatty reversion trade back to like 160s, but who knows? Market structure's not done with this one yet, I don't think. You got your basic hype wave, your accumulation, you get your short squeeze, that's all done, reversion's done. Accumulating around 124 is critical support, and if it breaks below that, you got 113, 112, somewhere in that neighborhood, it can hit those, even more immediate lows. But when Kramer says sell it, we look for a buying opportunity. So if it holds this 124, we could see some reversion trades in this thing. But again, it's just all the aspects of the sector of all the chips and AI together, just making for some interesting sideways. I mean, a lot of it. And then there's the other elephant. I mean, if we look at SPY, I mean, what was that article that came out where they were saying like a possible 83% decline in SPY is possible? Yikes!
Who was that? Robert Kiyosaki, Harry Dent.
I kind of
Or,
spin through headlines so fast I don't even care. Look who wrote them. But I saw somewhere that SPY was like, they said SPY is possible, or the S&P is possible to make an 83% reversion or something like that. I'm like, what? Yeah, okay.
Yeah, I think we need a catalyst for that. I'll go out on a limb.
Yeah.
Without a catalyst, I don't think we'll have an 83% drawdown.
No, I
I
don't think so
mean,
either. And
yeah, I don't know if you were around in 2008, but we had the mother of all catalysts, and we had a 60% drawdown.
right. And that's the thing. I was around, but I wasn't trading. And at the time before that, up to about 2000, what was it, 2004. I worked at a bank briefly for like 6 months, all of 6 months. I worked at a savings and loan. And I saw the writing on the wall. I knew that was going to fall apart on them because they were just selling everybody and their mother an adjustable rate mortgage, and to people who could barely qualify for the introductory mortgage payments on that. And I knew if it went up half a point, even people were going to be defaulting. Boy, I was right. I wish I would have been trading then. But seeing it from the inside, I mean, knowing what banks were about to fall, I literally just said, this is not the industry I want to be in right now. And I left. But long story short, right now the consumer is stretched to the limit, and the predatory rate was what, 29% on revolving accounts for all the revolving debt holders on credit cards and stuff. That's the consumer. And there was that article that came out the week before where they said the big banks were like on the brink of insolvency. Maybe there's a
I mean,
catalyst there, but
we have an inverse regional bank ETF. I'm liking where I'm sitting right now.
yeah, no, that looked good. Let me get that up on the screen here. As a matter of fact, that is where was it? SKRE, looking good. So we definitely see some advancements on the short KRE, and that's basically inverse regional banks, for those of you who don't know, or inverse KRE. And
yeah, I mean, look at that move from mid-May, 2258 to almost almost a 6-point move.
yeah, it's pretty good, man. I mean, that's a good swing. And this is one of those leverage ETFs where if you did follow the Kramer advice, don't trade it, own it, and wait for the options liquidity to bring you opportunities to sell premium on it. That's where I stand.
Yeah, I mean, especially if Kramer comes out and tells you to buy any of the regionals, which he does from time to time.
Very true. He did one 2 weeks ago, and then it flopped. So yeah, same difference. So yeah, I mean, things are kind of in flux, and with an election coming up, we got all the irons in the fire, just kind of waiting for one of them to slip out and scorch somebody, and then everybody starts running. Whatever. Something's kind of in the mix here, and it's just interesting to see everything kind of consolidating, waiting, going sideways, and we're going to get some big moves, including with NVIDIA. I mean, that's going to be kind of, I think, one of the biggest catalysts in the market as far as weight goes, and once that thing starts to move, I think a lot of things are going to move with it, and add the banks.
And don't forget, tomorrow we have FOMC, CPI, PPI coming up. So there's a lot of data the next couple of days. We also have a bond auction in there too, which and after the inflation data and all that could get real interesting real quickly.
Oh, for sure. And like I was noticing the other day, I was like, well, there's my infamous diamond pattern forming right before FOMC, as predicted. It's kind of a volatility indicator. Typically, we see these diamond patterns followed immediately by some pretty good volatility. I'm going to actually adjust it today to go like this, and that usually means that we're going to have a bigger move, typically. So FOMC could be another tipping point catalyst tomorrow, and yeah, I think things are going to start to come into perspective as far as the general market goes, and I think that a lot of the chips are going to kind of follow. That's just going to be how the market moves. But a lot of people see these as a bearish reversal at the top of a quick bullish trend like this. Typically, it'll revert back down to liquidity zones below support, whatever. Diamond pattern tends to mark all those targets for day traders and swing traders alike to be able to trade from one place to another. And the other thing that no one thinks about, though, is this is not a reversal pattern. It's a consolidation pattern. It can either reverse. So if things end up good in FOMC, or the Fed starts making some right decisions, God forbid, we could see a hellacious bullish movement. We could see the 540s appear on SPY, which is pretty phenomenal. But I mean, we were just the other day looking at the new all-time high going, wow, how did we get there? Well, I knew where the angular was, but it's kind of intriguing to see that a lot of these harmonic patterns play right into these news catalysts. And The same goes for the chips. If things start to change in the AI sector, if this whole thing where you got Musk saying that the addition of AI to the iOS on Apple's part is a security risk, and it kind of is. Yet people are buying the crap out of Apple today. I mean, you know, um, what's the
Yeah,
chance
I
of?
mean, I told you AAPX, I think, is our biggest volume day we've had since inception.
And it's been killing it. And same chart as Apple. These big parabolic moves like this, they have a very high probability of giving half back. The reversion trades are like basically my go-to for day trading. And I want to say that this can kind of be a precursor for a quick flip in the market for a liquidity grab or a reversion trade usually, and chalk that up with FOMC and everything kind of falling into place. Maybe we'll get some quick volatility, and then we can start to trend afterwards. So that's typically the case. So definitely keep nimble in this market, guys. And this week, I think we're going to see things come to a head tomorrow and start to either change direction or go sideways or go the other direction. Going to be pretty interesting week, and I think next week we're going to start to see trending one way or another. It's just in the cards. So stay tuned. Check us out on Thursday. We'll go and pick over Kramer's list, maybe find a couple good swing trades, maybe tell a joke or two, and
I'm sure
poss-
we will.
possibly throw a little shade on Kramer, maybe even a kudo or two. I mean, we give credit where credit is due, guys. And his heart's in the same place ours is. Respectfully, he just wants to help. So do we. So stay tuned for that. Check us out. Like, subscribe, tell your friends, and we're gonna start bringing some fun guests into that show too. So just a sneak preview. We're gonna be talking to some more people who love throwing a little shade at Kramer. So thanks again, guys. We'll see you later.